Mm-hmm. All right, what's going on, everybody? Communications. Free mini course. Hey, what's going on, Graham? How are you, buddy? I'm just going to put this into the chat here. There we go. Just putting for anybody who's new. Okay, there we go. All right, let's take a look, see what we've got here. Starting off with micro gold. Coin stocks going up. MSTR. MSTR. Is that in our little stock list here? Let me see here. We don't have it in here. MSTR. Stocks. MicroStrategy Incorporated. Interesting. What the heck is that? MSTR. It's got pretty good volume. MicroStrategy. Let's see. Oh, interesting. Look at that. 4-hour chart. 4-hour chart extended, and look what it did. Breaking below the 50 and breaking below the 50 to recalculate. So on that 4-hour chart, it's either going to pull down here, recalculate, and start going back up, or maybe it wants to go sideways for a while, or it wants to break to the downside like this, right? Those are the three things that price can do, right? These are the three things that price can do when the trend becomes extended. That's in every situation. That's in every single situation. When price becomes extended in a trend, there's three things that could happen. It recalculates and goes back to the upside. It can go sideways, or it breaks to the downside and continues the move down. Those are the three things that could happen every single time. Every single time. Get back over to the green list. Get back over to gold. get back over to gold here. It's up 11% pre-market. Wow, that's pretty exciting. That's really exciting. So you got in at 600. Yeah, that's great, Graham. That's awesome. Anytime when you've got a plan, just everything just works out better when you have a plan and not just observations. I'm going to do. Hey, Frank. Good morning. Good to see you. When you've got an objective plan, that's when things start working out, right? Yep, I did. I added it to favorites. I did add it to favorites. So yeah, so a lot of people they'll say, oh hey, what do you think about the 200 simple moving average, or what do you think about the 8 exponential moving average? And I say, well, what do you mean? What do I think about it? It's a moving average. What do you mean? What do I think about it? So what they're asking is they've seen some sort of they've made some sort of observation. They made some sort of observation, and they want to see if I'm going to say, oh well, price bounces off the 200, and that's when I buy. And that is not the case, right? But it's an observation that they made. And so they want to validate that observation by asking other people, what do you think about this moving average? Or what do you think about the RSI? What do you think about the RSI and having that on your chart? These are people who are at a point in their trading career where they make an observation, but they have not yet applied it to an actual trade plan, right? And so you will continue to test things. And until you take those observations and put them together, into an objective trade plan, you really just have a bunch of observations. So if someone comes to you and they say, well, what do you think about the 50 simple moving average? And buying when it pulls back into the RSI as it's doing this or whatever. Now you've got two things. Now you've got two observations. They've put those two things together, and at least now they're speaking your language. Now they're speaking trade plan language, right? So until people get to that point, you're kind of just making observations and looking at stuff. So the whole idea is, let's start putting this stuff together, and let's talk about that real quick. So every morning we have this thing, and it's called the opening range breakout, right? And the opening range breakout on gold is the first 15 minutes. So what we did was we programmed an indicator to tell us what the first 15 minutes of the opening range looks like. And that's represented here on these two blue lines. So this is a 15-minute chart. That means each candle is 15 minutes. And right here is the first 15-minute candle that formed. So the program puts a line at the bottom of the candle and the top of the candle. And now we can see. So the idea is when price breaks out of the opening range in whichever direction, until around like 10 o'clock when you get the reversal. So basically, from 9:15 to 10, or in this case, from 8:20, till 10 o'clock, if this breaks out to the upside, Some people just buy the breakout, okay? And the idea is this is going to continue the move up if it breaks to the upside within the first 15 minutes. That's the strategy. So what we do is we say, okay, well, if it breaks out to the upside, I want to make sure that my middle time frame trend is up, which it is. And I want to make sure momentum is up, which it is, right? How about the highest time frame? Cycling down, momentum is down. Well, that is against us now, okay? So we don't really have momentum and trend across the two time frames that we're looking at. So this is not going to be as useful to us because we're coming down in momentum and we're cycling down. And if this breaks out to the upside, it might be very short-lived, right? It might be very short-lived. And that's all we're saying. So the timing is off, and that gets very frustrating. That gets very frustrating for people, and they say too much. That's too much information to look at. I'm just gonna use the one. I'm just gonna use the one time frame, and and that's it. And that doesn't work out very well. So when people start to simplify trading, when people start to simplify things and they say, I'm only going to look at this one time frame, it doesn't usually work out so well for them. Doesn't usually work out so well. So trading is hard, which is why you want to automate as much stuff as possible. But once you do, and once you get it, you've got yourself a system that you can use forever. Hey, good morning, Kazi. Good to see you, buddy. So yeah, you've got a system that you can use over and over again for forever, right? And that's what we've built here, right? And you guys were a big part of putting this system together because you guys had ideas and you would suggest them, and I would go to the programmer and see if it could be done. And so far, we're batting 1,000. So what's going on here? Kind of just going sideways on gold on the opening range. Just starting to cycle up here. So we've got that high time frame. We've got that high time frame momentum. Okay. Now, unfortunately, today we've already hit this ADR checkpoint here. So look at the highest time frame here. When let's put a vertical axis line. So right there, that happened last night, 2200 hours. Pulled up, hit that second ADR checkpoint, and it hit that ADR checkpoint. And look, we were just starting to cycle down. We still had momentum, and it did go up, a little bit. It pulled back, tried to make another move, and then failed. So we could get a very deep pullback here to the 50, possibly. And that pullback to the 50 is where? Right? There's your 4-hour trend cloud. Let's make it, let's always make that like, let's always make that purple. That's an easy color to identify. High time frame trend cloud from now on will be purple. So we're pulling back to the high time frame trend cloud. And that makes sense. Fourth wave, hit that ADR checkpoint. The ADR checkpoint, Kazi's saying, when you learn to define an edge and learn how to execute your trades flawlessly, what you are expected to do, what you are exposed to is possibility for unlimited wealth. Wow. Yeah, Mr. Mark Douglas. Mr. Mark Douglas, right out of the book, right out of Trading in the Zone. I tell you, you could read Trading in the Zone 5 or 6 times, and you can get 5 or 6 things out of it that you didn't catch the first time. That is the beauty of that book. Excellent. Yeah, excellent, Kazi. It's all about making those observations, right? And putting it together, defining the edge through your observations, and then going a little bit further and putting it together in an objective trade plan that you can execute over and over and over again, right? And some people like to take that process and put it into an automated trading system. And there are issues with that as well, right? There's issues with that as well. Unfortunately, I don't think with these automated trading systems that you can put a stop loss. You believe it or not, there are some there's some trading software out there. There's Minotaur Trading. There's Blue Edge Financial. There's NURP, NURP, right? All of these systems are about $25,000. I know Minotaur wanted $10,000 for their system. Okay, all right. But the stop loss is merely a drawdown of your account. So I believe that the only way to set the stop loss is to say, when my account goes below 3% or 5% or whatever, then turn it off. So it doesn't allow you to take small attempts, like 2 or 3 small attempts at a trade. And that's how these systems are. So until somebody experiences that, we'll never know. We'll never know how it is. And the these automated trading systems, they do require an account size that's pretty large. Nothing under 60,000. They say minimum 25,000 or something like that. But from what I've seen, any of the examples, let's put it this way, any of the examples that the automated trading system companies show you, any of the examples, they're all in accounts that are over $100,000. They are trading accounts that are over $100,000. All of them. There's not one automated trading system that I see that's running on a $5,000 account, a $2,000 account. Doesn't exist. It doesn't exist in those big companies. Doesn't exist. Keep that in mind. Is that for you? Is that for you? If they're not using examples of $5,000, yeah, everything. A lot of the examples are showing returns on accounts $500,000. And then they talk about, oh, this guy has got $1 million account and he's using our automated trading system. For some reason, you need these big accounts because it's set on drawdown. So the drawdown, 2%, think of it, 2% on $1 million account, 2% on $1,000 account. You've got more wiggle room on the $1 million account, right? You've got more wiggle room on the $1 million account for price to move within in order to be correct, and take the trade. So just keep that in mind. Let's go take a look at copper. Okay. Oh, look at what we drew here on copper the last time. So we were right here on copper, right? And we said possibly, what we want is a pullback, to the 50 and then a move up. And what did it do? It broke to the upside. It pulled back into the trend cloud and formed a little double top here and then a move. And we seem to have drawn that out right here. We drew that out right there. Also notice here, look at how, okay, this is the 4-hour chart. Let's draw a market edge here. Okay, here's the breakout of the high. Everybody see that? There's the breakout of the high. Look at how price pulled back to where it broke out from and then made a move up. It even tested it twice. It pulled back, made a reaction, and then tested it again and broke to the upside. This is a very important observation here. This is something you definitely want to take a screenshot of because it's an important concept. I'm going to take a screenshot of that and save that. Okay. Copper. Very important concept. Now put TrendCloud on there and look at that. Okay. Previous resistance becomes support. And look at how it follows TrendCloud. Look at how it follows TrendCloud. Breaks the previous high, previous resistance becomes support right here, right? Previous resistance becomes support. And where does all that take place? Inside of your trend cloud. It takes place inside of TrendCloud. This area on your TrendCloud system is where you'll find the strongest demand zones. It's where you'll find reversal patterns, okay? And it's where you'll also find momentum-based signals, TrendCloud momentum signals. It takes place the majority of the time, not all the time, but the majority of the time, it will take place within your trend cloud. And remember, that's adjustable, right? That is adjustable. If you double click onto your trend cloud, you can see that the trend cloud is made up of the 15 and the 34 exponential. You can adjust that with this system. Maybe you're trading, like Graham likes to trade stocks. Maybe he's got to adjust this part of TrendCloud on the stocks that he's looking at. Simply because every time he maybe when you put TrendCloud on a stock or something, it never really pulls back into the TrendCloud. That means you have to adjust it. See how it just pulls back here, just touches the top and then takes off? Or like right here, every pullback just sort of hits the first line of TrendCloud. It doesn't pull back into here. If you see that happening over and over again on that particular stock or futures contract or Forex pair or whatever, you can adjust this. Maybe in the Forex market, it would rather have the 8 and the 24. I don't know. The 8 and the 20. Yeah, Graham. Yeah, you take a look, and all you have to do is ask yourself, is TrendCloud pulling back? Is price pulling back into the TrendCloud? That's all you have to ask yourself. Is price pulling back into the TrendCloud? In the futures market, the 15 and the 34 work beautifully, as we know. You can really fine tune that. And that will also alter when these momentum signals get taken. Okay. That will also alter when the momentum signals appear. So yeah, so you are able to adjust your TrendCloud. See how it works so nice in the futures market? Pulls back into TrendCloud, pulls back into TrendCloud, move down, momentum signal to the downside, momentum signal inside a TrendCloud, pulling back into the best demand zones right here. Look at how it pulls back into that demand zone and gives a signal right here. Becomes extended, right? So when your trend starts to become extended, put that trend line on there, right? Put that trend line on there. Break of trend line, pulls back, finds support at the trend line, and now you're making a move up. And then you draw the second trend line like that. Breaks below, keeps going. There you go. Right? Look at that. Breaks above the trend line, finds support. Now you start again. Breaks below, goes sideways. You see this thing going sideways. Breaks above, draw it again. Right? This one, as soon as it broke above, it actually, I guess, draw it like this. This was a really strong upward move. Became extended, broke below, and then there you go, right? And you just keep drawing those trend lines. Down, breaks above, finds support, moves up. Whoops. Okay, there we go. Practice drawing those trend lines. Okay. So, wow, copper is just taking off, and hitting all those ADR checkpoints there. I mean, 168 on the Globex trap, you know that's extended. So we've got Globex trap, extended, ADR checkpoints, right? Early in the trend cloud, right? So we've got the Globex extended, we've got the ADR checkpoints extended. This thing's just taken off. Cycling up, momentum's on our side. Holy cow. So, what to do here? I mean, with all that upward force, if we took a chance, look how much would that cost us? Very expensive. Very expensive stuff, copper. We got a 15-minute rejection candle here. Maybe it's going to retest and pull back for now on that 15-minute. Now, see how the opening range isn't quite. The opening range here is not quite inside of that 1 hour trend cloud there. High time frame trend cloud. Let's just make purple. There's a rally-based rally inside of the 1 hour trend cloud. Whoops. So which one is it going to be? We'll never know. We'll never know. If this thing is taking off so aggressively, maybe you want to go for this one, right? We can do that. Previous day's high is in fact, inside. It's inside of that high time frame trend cloud. You'll never know. So you have to take the proper amount of risk. One there. Doesn't quite make it, right? It's either going to work or it's not going to work. So if you had a bigger account, right? If you were trading a much bigger account, to do something like this is no problem, right? No problem. You need a $30,000 account to take a $300 risk. Simple as that. It's as simple as that. Yeah, Graham, trend ribbon squeezes. Yeah. You can see that on TrendCloud. The ribbon is a series of moving averages. There's an Australian guy who invented that, Guppy, Guppy, the Guppy trading method. It's very interesting. I think it's Daryl Guppy, I think his name is. He's an Australian guy, and he's got this Guppy indicator. It's only available on, I think they have it on TradingView. I think somebody replicated it on TradingView. You could find it. Let's see if it's in there. But to watch, let's see. Guppy. Yeah, here it is. Guppy multiple moving average. GMMA. Yep. Let's see. GMMA. Wow, this one has a lot of notation here. Let's bring them both up. Here's, let's see. So same type of thing as I was inspired. I was inspired by that. So here's right here. Squeeze, right? So these are a bunch of moving averages here. It's very interesting. It's a very interesting concept. And you've got same concept here, okay? Same concept here on that squeeze. Let's see what this guy did. Ah, see this guy. So this guy just has the moving average. Now, take a look. The way you're supposed to use the Guppy method, the Guppy method of trading, is you have to wait for a squeeze like this. You wait for a squeeze. Here's the breakout to the upside, right? You've got a breakout. And then the very first pullback into the moving average. The very first pullback into the moving average. So you could be waiting down here, and that's the concept. Interesting, right? Very interesting stuff. And in this example, I mean, it worked amazing. But that you know, so you have to wait. So there's no trade here. You have to be very patient. This is a 1 hour chart. You would have to wait days, right? Because the entry is the first pullback, into the so here we get this deep pullback here. It breaks below. Breaks below right here. First pullback. Which one is it going to be? You'll never know. You'll never know. Doesn't quite pull back to there. And then a move down. Forms a, here's your low. Here's your higher low. We're just going sideways. You know, there's the pullback there. Let's go back. Sideways, right? Here's the, right there. It does break above that. Then that pullback takes place. You know, we're just making observations here, right? We're just making observations here. Even if you didn't have any of this on the chart, we can make a very nice observation on that 1 hour chart where here's your high. There's your high. Here's the break of that high. Start looking for demand zones, right? It kind of wants to pull back into this, right? Doesn't really make it. Doesn't quite make it unless you draw it like this. Unless you draw it like that, you know. Then it forms a drop base. All these are basing candles. It basically, it goes sideways, breaks above, and it just never comes back, right? It never comes back to retest this. It just keeps going. Just keeps going, right? Breaks of structure are very important to observe. Those breaks of structure are very important to observe. So interesting stuff. So we put our TrendCloud system. TrendCloud, we kind of primed it for the futures market, right? We primed it for the futures market, and then added extended trends, right? We added extended trends to it. Okay. I'm going to take that off, obviously. ADR checkpoints have already been hit. And, you know, when the ADR checkpoint has already been hit, that's kind of it, right? There's really, and you're extended on Globex, 168. What would fit that narrative? What fits the narrative of an extended trend or extended Globex, ADR checkpoint? You got to have some break of structure, right? So if this actually pulls back and breaks through this demand zone here, if we break through this demand zone right here, that would fit the narrative of some kind of trend reversal because we've hit the ADR checkpoint and we're extended on the Globex. So if we start seeing structure getting broken and we start looking for CCI to start breaking below negative 100, then we can say, okay, here we go. We could have some nice pullback. Everything's on our side to take this, except for the fact that we've already hit, ADR. But because we have trend and momentum on our side, if it wasn't so damn expensive, what is it? Is it the same on gold? No, gold, as you can see, momentum is against us. So gold really wants to pull back deep. Where's it going to pull back to? Well, here are two. Okay. That right there. So there you go. There's the high time frame. Let's get rid of this. The green box is the 1 hour demand zone. The purple box is the 4 hour trend cloud. Pulling back into this area here. That's looking pretty good. Why don't we set that up? Okay. 2 contracts. Can we afford 3? Nope. We can afford 2 contracts right there. That's a really nice setup right there. Counter trend on gold might work. Kazi says counter trend. Yep. We would really like to see some sort of extended trend, right? We've already hit that. Kind of going sideways. We've got that downward momentum. We can take a shot at that. Being that when it pulls back to here, we might have, we might have enough in the tank on this middle chart. Then if it does break through this, the thing is, we have to think of gold, right? We've got to think of gold as a really valuable large cap stock, right? Kazi is brave. That's the only thing I'm thinking of, right? Right, Kazi? Like gold, I think people are buying the dip on gold. Everybody's gold crazy, And so do you want to short Google? Do you want to short Amazon? It's like, let's wait for opportunities where this pullback, comes into play. That's what I'm thinking. But yeah, I mean, you can definitely play the short. You can definitely play the short on gold. What is that? What is that symbol? Oh, I've never seen that before. That's hilarious. It's a nail biter emoji. It's a real nail biter. It's a real nail biter. That's right. Everything. So everything. So like the nail biter emoji, right? Like how does that translate into trading, right? It's uncertain. That's the uncertainty. That's the uncertainty that we all deal with, right? And the way you get rid of the nail biter in your head, right? The way you get rid of the nail biter in your head is to make sure this number right here, guys, that number right there cannot make or break you. This number that you choose to make as your stop loss, that is what is going to get rid of the nail biter, right? Stay away from it. If we have to think this hard, right? Yeah, right. So what Kazi is saying is, if you have to think that hard about it, maybe it's not the right trade. Maybe it's not the right trade, right? If you're sitting at your screen like this, or you're trying to work through this like a real difficult math problem or something, maybe your system is trying to warn you about something, right? So yeah, so that's a choice you have to make. So we don't really know. All we know is that we usually pull back into this area here. We're still very early in the uptrend, so why not? Why wouldn't it pull back in here and keep going? If it pulls back into this demand zone and we're still in the blue area here on CCI, maybe it gets to here by tonight or tomorrow. And this is far enough where the mass psychology of everything starts working again, and we start going going up. It's also the 50 simple right here. The entry point inside this demand zone right there is the 50 simple. We could get something. We could get at least a 1-to-1, 1.5-to-1, right? You could get some little move out of it, possibly. Who knows? We don't know. Yeah, the 1 hour demand zone. Really liking the 1 hour demand zone. Yeah, and we're even protected. We do have 100% ADR. We are protected by a couple of ADR checkpoints. So we've got some support inside of this 1 hour demand zone, which is a level of imbalance. We've got the 50 as a support level. We've got the high time frame TrendCloud as a support level. We've got some nice support here. It's also a 15-minute demand zone. I don't know. I mean, we've got when it pulls back to here, we should still be within momentum. We should still be in an acceptable momentum range when this pulls back into here. Pulls back, we should still have that momentum in play, right? So we're saying that it's very possible that within this 1 hour demand zone and with all this support, that is the turnaround point of our cycle, and then the momentum will catch up. So right now, we're in a corrective phase on the 4 hour chart. This is a corrective phase, see? Uptrend, but cycling down, right? We are correcting. Where does the correction usually end? Inside of that trend cloud. That's represented by the purple. Inside of this 4 hour trend cloud area, we have a 1 hour demand zone. We have a 1 hour support level. We've got also a 15-minute demand zone and an ADR checkpoint. Let's make sure this number is the right number. Let's make sure that this number is acceptable. And then no more nail biter, right? Then you're fine. Whatever edge that you see, if you put enough pieces together and you see that there's an edge, we just went through it, right? We don't have that high time frame momentum, but we've got a lot of pieces, right? As long as that stop loss number, the amount that you risk is 1%, this is less than 1%. It's less than 1% of our account. That means you're allowed to take the trade, you know? And it's gold, right? We think that people, you know, our theory is that people are buying the dip on gold. Well, here's a level of imbalance with some support levels. Is it going to work? I don't know. If it doesn't work and it wants to go lower, we would just simply look for the next level. That's it. That's all it is. So, you know, we'll leave that on there. Maybe it comes in here later tonight, hovers around, goes sideways, momentum starts to shift on the higher time frame, and then goes up. That is a possibility. Into the next day, right? Copper. Okay. Look at copper pulling back into the opening range. Very strong, right? My goodness, copper is so strong to the upside, creating a really big rejection candle, right? look at how if it does pull back into here, you know, the fact that we hit all these ADR checkpoints, I mean, it really kind of wants me to say, let's go for this. Right? It's got to pull back. Just enough, right? Let's take a chance. Let's take a chance on it and see what happens. Hit the ADR checkpoint already. Could be that the move is over, but this is a legitimate area. Okay, look at where momentum is on that middle time frame. You know, don't know. If it rips through, it's going to want this as the next one, right? Previous day's high, right there. Okay, 1% risk, 1% risk. A ton of upward momentum, right? A ton of upward momentum. Even more so than gold, right? The pullback is taking place. The pullback is taking place. It's retesting the opening range. I mean, what more do we want? It did hit the ADR. But it did hit the ADR checkpoint for today. It did, go as far as it says it's going to go, but maybe we can survive this and it goes sideways. Momentum trend on our side. I don't know. Now we're just starting to turn red here. Big rejection candle. Maybe we take a 1-to-1, right? There's 1-to-1. We'll go a little bit further. I know it's 10 o'clock. We can film this. And let's just see what happens. Nope. First one didn't work. Heading for that second demand zone. And where are we at on gold? Gold pulling back. Okay, Frank, I'll see you next time. I just want to capture this example on on video, guys. Everything is, whenever we set a trade, I like to film it, study it, and record it. I didn't want to end the session with a stop out, but you know, we can't plan stuff like that. Pulling back to the 15, the 15 minute 50 simple. And the 1 hour TrendCloud. While that is playing out, let's take a look at silver. What's going on here with silver? Deep pullback, right? Look at that rejection candle on the 4 hour. Pulls back, breaks to the upside, pulling back into high time frame. High time frame TrendCloud. 1 hour demand zone right there. Uptrend, cycling down. Pulling down into the second ADR checkpoint right here on silver. Maybe we could get that on the micro silver. Micro silver is more down here. A lot of support levels down here. Possibility. We will set that up as well on the micro silver. Pulling back to that. This didn't work. Get rid of that. Let's put that right here. Maybe it wants that previous day's high. And that will be the payback. Come on, copper. Come on, copper. Come on, copper. Fast and furious return to that demand zone. Let's see if we can capture it on video. Let's capture it on video. So now we're inside of the 1 hour. We're inside of the 1 hour trend cloud. Pulling back in an uptrend, plenty of upward momentum. Seem to be getting rejection out of there. We just needed to pull back a little bit deeper. Almost there. There we go. All right. Second attempt. Let's see what happens. Let's see what happens here. You never know, right? You never know what exactly is going to happen. Now, if we do get the reversal here, and let's say maybe it just kind of goes sideways for a while, because this is such a strong rejection candle from this area, if by today we do break above this right there, we're going to have a very, very strong move to the upside. We would have a very strong move to the upside because this is actually telling us, you know, hey, we've got a lot of sellers came in here, but if we break above that, that means that the buyers won, right? The buyers won the buyers won out. Okay, but if there's such a strong move of sellers coming in, maybe there's some news coming out. So we have to just take the chance, right? The risk is fine, right? 1%. If both of them lose, then, you know, it's still a scratch on the knee. 1% scratch on one knee and 1% scratch on the other knee. And if it doesn't work, we just walk away. We just walk away from it. No big deal. So we'll go a little bit further and we'll just kind of hang out and we'll watch this trade take place. And we'll see how it reacts. Yes. See, we're not nail biting anymore. We're smiley face emoji. You have to get to, I guess you just have to get to a point where you're okay. Yeah. You just got to get to a point where you're okay losing 1%. If you're okay losing 1%, you can take those trades. You can take those trades a lot easier. You're not wiping out your account. It's 1%. It's a 1% risk. You're not wiping out the account. Okay. So look, if it doesn't work, it doesn't work. Next time it might work, right? News came out, something happened, huge pullback here. When we looked at last month, when we looked at the last month's, records, right? There was that one area where we took, I think it was like 4 in a row, took like 4 losses in a row. That was tough, right? That was tough to watch. Like, again? So, and that wasn't in one day. Like maybe it was like one day you took 2 losses. The next day took another loss. Maybe it was like 2 losses in 2 days, right? Well, you know, sometimes that happens. But if you keep following the plan, it works itself out after a series of trades, right? After a series of trades. That's too bad. Okay, guys. So it didn't work out. No big deal. We walk away from it, and we just look for the next move, right? We just look for the next move. So not a big deal. 2%, right? Holy schmoly. What is going on here? %. A lot of people. What do you think happened here? A lot of people said, holy cow, this thing is ripping to the downside here. And a lot of people got scared, you know. Now, unfortunately, if we had a bigger account, we could give it a little bit of room, but, you know, we don't. We've all seen the scenario where it comes down, just stops us out, and then reverses. You'll never, right? It comes down, just stops you out, and then turns into a winning trade. There's no way in that situation that you could identify that in any case. It either has to work or not work. Don't rack your brains about, oh, if I was just 2 ticks below, a little bit lower, if I was just a little bit lower. You can't get wrapped up in that. It has to work when it hits the demand zone. It has to work when it hits the demand zone in reason. Now it's starting to reverse. Right? Some people call that stop running. There's no way. There's just no way to get around that. Jeez Louise, look at this. All right. Might go sideways. We got yellow candles here. Yellow candles mean we're starting to transition from an uptrend to a downtrend. Maybe this wants to go deeper. Okay, maybe it wants something here, right? Oops. Okay, maybe it wants this one. Right? We don't know. Now we're below that 15-minute trend cloud, and we may want to, wait for some reaction. What's the reaction we would wait for? Well, let's wait for a low, a higher low, and a break of structure. All right. Let's just wait for that, and then we'll get back in. What's going on with gold? Gold still pulling back, right? Pulling back pretty deep. Now, according to our rules, we're really out for the day, right? Because that was a 2% loss, and we're maxing out on our trading challenge at no more than $500. So if we take a loss here, we're taking a chance on losing the challenge, right? So if you're in competition, you would have to definitely not take that trade. If you were in a competition where the rule says you can't lose more than 500 in one day, can't lose more than $1,000 within the 2 weeks of the challenge. For the sake of this, I'm going to leave it. Okay. All right. Anything else on here? We kind of stuck with the metals today. Wow. What happened on crude oil? Where's the opening range on crude oil today? Remember to use the 5-minute opening range, right? So crude oil kind of sideways, right, on that 1-hour chart. Momentum is down. Momentum is down. Pulling back into this area. Breaking out to the, broke to the upside, broke to the downside. Who the heck knows? Who the heck knows? Let's see. All we can do is make observations here. Downtrend, momentum is down. We could have a really deep pullback here. We can't really do anything on crude oil until, again, until we get something like put in a low, put in a higher low, some kind of break of structure. Now we can get back in the trade to the upside. Okay, we're waiting for that low. Form a low. Form a higher low. Right, as soon as it breaks structure, we'll form that higher low, and we can start taking the trade. Start looking for pullbacks at that level of support. That's what we would be looking for. That's always the pattern that we look for when we want to establish some sort of stability. And there you go. So, great lesson today. Couple of you got to see a trade fail properly. You got to see a trade fail properly. And we didn't get crazy about it. We didn't chase anything. We just simply made our evaluation, took a 1% risk. It didn't work, and that's okay. It's a scratch on the knee. Go back to copper. Holy schmoly. Holy schmoly. We just get stopped out, and now look what's happening. Now it's going up. It has to, there's no way around that, guys. Okay, so this is a really good lesson. This is a really good lesson. It's working out right now, right? But will this continue down a little bit deeper? You never know. The trade, the lesson is, today's lesson is all about the trade has to work within the parameters that you set it at. That's it. If it doesn't work, you can't rack your brains trying to figure out, oh, if I just put it 4 ticks below, I would have made it. If I just put it 5 ticks below, I would have made it. You'll never know. You will never know, okay? So the moral of the story today is the trade has to work within the parameters that you set it at, or it's just simply chalk it up to a 1% fail, a 1% risk. That didn't work out. Guys, it's a scratch on the knee. Next time, it'll work. But that might, like I said, last month, we took like 4 losses in a row, and we still made money, right? We still made money because we followed a plan. So continue to follow the plan. Sometimes you'll take a few losses in a row, but over the series of the whole month, you made money. That is always the most important lesson. Look at this. How frustrating is that? I mean, come on. Here was the zone, right? Because this was so expensive, we had to put our stop like right there, right? We put our stop right there. Oh, if only I put my stop below the previous day's close, we'd be making money. If only I did this, if only I did that. Guys, it's just simply the trade has to work within the parameters that you set it at. If it doesn't, you just go to the next trade. That's it. Okay? All right, guys. That's the moral of the story today. Continue to do that. You will be consistently profitable. We've done it consistently, right? We started the trading challenge in February. So we got February and March documented as consistently profitable. April will be consistently profitable as well. And we just keep moving forward. All right. Okay, guys. Good trading, everybody. And I will see you guys tomorrow. Thanks, everyone. I see that, Graham. Yep, I see that. VIX is flat. Yep, I see that. That's because we hit those ADR checkpoints, right? We hit those ADR checkpoints and things just kind of went sideways and flat. All right. Sounds good, buddy. Okay, everyone. I will see you guys. We'll meet up again tomorrow and try it again. Thanks, everyone. Take care.